Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
The committee decided to increase the policy rate by 25 basis points.
They say the stance is neutral, and that is very, very reflective in the statements.
What the yield curve tells us in bond and swap markets is 2 more rate hikes, even after today.
I don't think immediately we need to react based on this 25 basis point hike.
At these times, perhaps it makes prudent sense to be slightly proactive.
The Fed kept interest rates unchanged at the July-August meeting.
I don't see inflation getting away from the Fed at this point at all.
Everything suggests that they're going to continue to normalize rates in a very steady way.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me is Sonia. Well, we have put behind a rather busy day of central banking. The Reserve Bank hiked rates, the Fed left it alone. Both were on expected lines, and so today we can approach the day anew. The morning cues are not looking extremely positive. Once again, it's the trade tariff chatter. And you can see a little bit of red on Asian screens as well as on Wall Street screens. But the positive for India is that crude has moved closer to $72. It's 72 and change. And that's always a bright spot. That completely neutralized the rate hike yesterday. Yeah. Normally, the rate hike would have pushed up yields by about 5 to 10 basis points. But with crude falling, tumbling 8% yesterday, much of that was negated. But we may see that impact today. We did see Bank Nifty struggle in the last hours. Yeah. Today, the impact of the rate hike and the language as we parse it, indicating that there could be further rate hikes in the months to come, is going to impact realty companies, for instance, consumer goods companies, NBFC companies. So today, perhaps the rate hike will be digested better. And, of course, the consumer story, it looked very bright, but... Yeah. When the auto sales numbers came in, first Maruti, then Hero, there are patches of consumption and Eicher not quite coming up to speed, would you say, Sonia?
Oh, absolutely. And, you know, yesterday we saw both FIs and DIs sell in the market. So, I mean...
Minor selling, yes.
Minor selling. And you know what? After 4 days of running hard, the market just ended flat yesterday. There was no major correction that you saw in the market. So, maybe just consolidating after hefty gains, right? But I take your point entirely about the auto sales, because over there, now we're starting to see some chinks in the armor. It could also be because many issues like the axle load norms changing, the trucker strike in the medium and heavy commercial vehicle space. But some of them clearly are losing a bit of market share as well. Eicher Motors, for example, and Royal Enfield. So, yes, it may not be as strong as what we've seen before. But for the market, Lata, it's just consolidation, right, what we saw yesterday?
Oh, so it seems.
Yeah.
I would just want to know whether the markets will be able to look at the second half with equal elan. What did the monetary policy tell us? Of course, that the rate hike was largely expected, and I'm personally happy because I had expected the rate hike with a 5:1 vote, and that's how it turned out to be. So for the market, I mean, if I could guess it, many in the market would have, savvy traders would equally have prepared for it. But the more important part is the inflation forecast that they have given. The inflation forecast has been upped from 4.7 to 4.8 for the second half, and even then they admit that more could happen. Yeah. Much depends on how the MSP is implemented. But the FY20 first quarter inflation forecast has also come in. That is at 5%. And then the RBI reiterates that, our goal is 4%. If your goal is 4% and your forecast is 5%, clearly you're telling the market that I have more work to do. Yeah. I have more work in terms of rate hikes. So that's exactly what I got. I caught up with a host of experts. So let's start by telling you that many of them are expecting, if not October, probably not 3 back-to-back rate hikes, but 1 in December and maybe another before the financial year is out. Here are our experts, and we are back with a Fed analysis as well. I'm joined by P.K. Gupta, Managing Director, State Bank of India, Manish Vadawan, Managing Director, Head of Fixed Income, HSBC, A. Prasanna, Chief Economist, ICICI Securities Primary Dealer. Gentlemen, thank you very much for joining me. Well, first to the economist. How many more rate hikes does this sound like, Prasanna?
Well, if you're talking about this financial year, we are penciling in one more rate hike by December, and we think there is a chance of a further one more hike before the financial year ends. But if you're talking about this cycle, then clearly we are not done. I think there are more hikes in the offing in the next financial year as well.
Okay. Well, that would immediately beg the question, then why not change the stance? We've already had 2 hikes with a neutral stance. And if you're speaking of one more, then, and if there is a clear gap between the inflation forecast and the inflation mandate that the MPC has, is the MPC behind the curve in terms of stance?
Well, I mean, we have to recall that with the neutral stance, this MPC has already cut rate once and hiked twice. So obviously, I think the question has to be put to them what exactly they mean by neutral. Perhaps it just shows that they are not comfortable wording it in any other manner. I mean, if you start talking about a tightening stance, probably they are worried that the financial market pricing will go out of hand. Maybe that could be one reason. But at the end of the day, I think in markets, actions speak louder than words. So the fact that they hiked twice, I mean, even if they say it's a neutral stance, it's clearly we are very much in the midst of a rate hike cycle.
Exactly. Then why did bond prices rise today after the rate hike and after the central bank put on the table inflation forecast, which quite clearly indicates that more work is left to be done on the rate hiking cycle, 5% in the first quarter of FY20. Manish, explain that to us. Why did bond prices rise? The yields actually fell from 7.79 to 7.7574.
Yeah. I think, first of all, on the rate hike, I would call it an insurance hike, which RBI has done. And the way the market has reacted is, as market feels that there is a long pause which is coming from RBI, and it expects that for the next 6 months, there may not be any action on account of the uncertainties which the governor and the deputy governor pointed out in terms of inflation numbers or currency wars, etc. But, you know, we are headed into a long pause. This is what I also sense for the next 6 months. And in that, now the dynamics of the market, which is normal demand, supply, etc., play out. I think in that context only you saw this kind of a rally which happened.
Mr. Gupta, now what does this mean in terms of running the bank? Before I come to what it means to your own rates or the banking system's rates, what have you made of the policy? Do you think, are you smelling more hikes maybe in December, if not October?
So I think this hike was in any case expected, I think. So the RBI had delivered on what the market was really expecting. But, you know, on this point about 4.8 or 5% inflation projections going forward, I think the way to look at it is, you know, in terms of their mandate also, it is 4% plus minus 2%. But I think somehow we have stopped talking about plus minus 2%. We are talking only of 4%. So if you look at, you know, that the inflation target is only 4% and nothing else, then probably more hikes are there. But if you say that, you know, it's within the tolerance level of RBI, that 5% is not really off the mark, then probably, you know, there could be some pauses.
Okay, so no surprises this time either from the RBI or from the Fed. The Fed keeps the rates unchanged. The RBI goes ahead and hikes rates. But we'll be discussing that with our guests as well. For now, let's tell you what wise experts have to say as we head into trade this morning. Gautam Dugar of Motilal Oswal says the Q1 FY19 earnings so far have been mixed, with aggregates impacted, as has been the case for the last few quarters. Corporate banks and Tata Motors have been impacted. He says even as revenue and EBITDA have met their estimates, profits have missed, largely dragged by corporate-focused private banks, owing to accelerated provisioning even as fresh slippage generation has moderated. He says their nifty EPS estimates for FY19 has been cut by 3.6% to 559, driven by Tata Motors and ICICI Bank, which account for 70% of the EPS cut. Gautam says their estimates for FY20 are largely stable at 690 to 694. He's building in the nifty EPS growth of 22% for FY19 and 24% for FY20.
Okay, and now for money market calls. They could be important today. Yesterday we saw a very strong rupee because of the rate hike. 68.43 or thereabouts, yes, where we ended. There it is. It was a strong move that you saw. Mohan Shenoy of Kotak Mahindra Bank says, as expected, the US FOMC keeps its policy rates steady and 2 more hikes are likely this year in September and December. He says with no major triggers, dollar index is in a broad range of 94.20 to 95. Shenoy says the rupee is likely to gain support from the RBI rate hike yesterday, lower oil prices and custodian flows. He expects the USD INR to trade in a range of 68.20, 68.50 for the day. So strength in the rupee to continue.
Okay, and on the bond market, Mohan Shenoy says a decline in oil prices, expectation of a pause in the policy rate hiking cycle and appreciating rupee has made the G-Secs bullish. He expects the 10-year benchmark bond yield to trade in a range of 7.67 to 7.72% for the trading day.
Okay. That'll be a bit of a help, definitely, if yields were to go below 7.7. Psychologically very positive for NBFCs, but I'm not sure how long this bonhomie in the bond markets is going to last. At the moment, it's already 7.70. Let's go over now for all the world developments to Mangala.
The big Q overnight, of course, Fed leaving its rates unchanged by saying that the economy is still rising at a strong rate. They will hold for now, and they see further gradual rate increases in the US. So the US markets weren't really perturbed or excited by that development. They were moving to their own cues. The Dow Jones led lower by a couple of exporters like 3M and Caterpillar, but NASDAQ, pause for breath for that one. Apple close shy of the $1 trillion mark by just about $12 billion. So that is something, the street will definitely take note of once it hits that $1 trillion mark. The stock for today, however, on the Wall Street could very well be Tesla, up about 9 to 10% in after-hours trade after Elon Musk says that they see a profitable second half. The trade war, the latest in the trade war update now, we understand that Trump is considering 25% tariff as against 10% tariff on $200 billion worth Chinese goods. The European markets more or less in the red, and the FTSE was led lower by Rio Tinto, which was down about 3% despite first half profits rising by about 12%, and the company announcing a bigger than expected dividend and buyback too. Macro cues, a lot of them. Bank of England meets today, and on Friday we have Theresa May meeting the French president for Brexit talks. Asian markets, more all of them in the red, but lower crude would mean the SGX Nifty opens mildly in the green, outperforming the other Asian peers.
Absolutely. Thank you very much, Mangalam. Both these cues are actually India positive. The Trump imposition of 25% tariffs instead of 10%, again, disturbs supply chains, not just in China, but all the countries that supply, which is, Malaysia, Taiwan, Korea, all of them are suppliers to Chinese goods. Yes. And they suffer. India, having been in this grand isolation, cut off from all these supply chains, is actually a beneficiary, and plus, of course, crude. So this red that we see may not impact us. It's now time to drill it down to the micros, and our entire research team is prepared with their top 10 list of stocks that they're going to watch for the day. Well, we have to start with the big one, auto sales numbers. Sonia, you already gave us a peep saying that you were disappointed.
Yes, there's a slowdown that we're seeing, especially in the two-wheeler space, So I guess these stocks could be under pressure. Hero MotoCorp and Eicher Motors is on my radar today. Hero MotoCorp actually saw just a 9% year-on-year growth, so the sales have the growth rates have slowed down quite a bit. If you look at the 6.79 lakh units that they sold this time around, it's a fall that we've seen on a month-on-month basis, down about 4%. And you'll get the trend. For the last 2 months, in May and June, they've been doing 7 lakh plus. Now they've slipped to about 6.79. So that's something that the street will be a bit concerned about. But I think the bigger concern really is with Eicher Motors, because the sales from Royal Enfield have been under quite a bit of pressure. Actually, the waiting period has gone down quite considerably for many of its products like the Himalayan, etc. So that just goes to show that, demand is not as robust as it used to be many months ago. Look at the trend. It'll be up for you. 69,000 is what they sold this time. It's the lowest since August of 2017, and it's been falling over the last many months. So perhaps that's something the street has been pricing in as well. Finally, Tata Motors. Tata Motors, I'm not going with any color because the domestic sales growth was good, but the street is focused on the weak JLR numbers. But good domestic sales coming in. Trucker strike, axle load changes, no impact as of now. Maybe it could come in the following months. But domestic sales growth of 21%, CV sales growth of 25%, and MHCV sales growth of 18%. So looking good for the domestic business, but no color because JLR is what the street is looking at.
Okay, fair point. I think the JLR's disappointment or disastrous performance is fairly in the price. So hopefully the street will take cheer from the domestic sales being good. But Nigel, the ever ebullient HEG, how did the numbers look?
Well, the numbers looked very, very good, Lata. On a year-on-year basis, yes, they were expected to look spectacular. They look spectacular, but even on a sequential basis, there's a growth of around 23%. The margins, yes, on a year-on-year basis, they expanded big time, but there is a 100 basis points expansion even on a sequential basis. So I'll be looking at the needle coke prices, and can they maintain these sort of margins in the next quarter? The profit number as well. They've delivered a profit for a single quarter of more than 770 crores. And finally, the Q1 EPS is around 193 rupees per share. In February 2017, the share price was 193 rupees per share. So that's telling you how good a performance it was. The stock should open up in the green.
Okay, now we know why the stock has doubled in 2018 despite such a volatile environment, right? Very strong quarter coming in for HEG. But Pidilite, how did that look, Mangalam?
Well, by virtue of the work that it does, it just stuck around to our poll, Sonia. So it was pretty much in line with what we were working with. The total income growth at 20%. Our poll of analysts' estimates was around 19% growth. So that is a mild positive out there. EBITDA came in at 382 crores. Our poll threw up a number of 383 crores. So absolutely no disappointment there too. And the net profit, though, that was mildly below our expectations, 641 crores. We were working with a number of 660 crores. Why did that happen? Well, because the effective tax rate came in higher by about 5 percentage points, 36%, and the other income came in lower by about 10 crores. So that is accounted, or that explains the weakness in the net profit. However, no complaints as far as the numbers are concerned. 18% volume growth in line with expectations. Consumer volume growth growing at 20% was something that was positive. Industrial business not doing as well. 7% volume growth is what the company posted out there, but really no complaints.
Okay, no complaints, all right. So that's for Pidilite. That stock has done remarkably well this year too. But let's talk about some more stocks now. Piramal, that group is in focus because reports suggest that the company is set to demerge their pharma and financial services business. What value could this unlock for shareholders? Ekta's here to tell us more. Ekta?
Well, huge unlocking of value, Sonia, but this is a logical step of, conclusion for something like a Piramal Enterprises because it comprises of both its pharma as well as its financial services business. Financial services has overtaken the business in terms of percentage of sales at over 50% of sales for the quarter gone by, as opposed to pharma, which is around 35% plus. So it would definitely be a logical step for the company to take. Piramal Enterprises likely to be the holding company. That's one of the reasons why you're probably going to see interest in the stock.
Okay. That's important, a stock that will be very closely watched, this demerger, post-demerger impact. Rima, there is, not demerger, but a sale of shares by parent L&T.
Yes, and this the company had to do because the promoter's stake currently stands at 87% and they need to bring it down to 75% to comply with SEBI's minimum shareholding norm. The reason the promoter stake was, high in the first place because the company has about 3 years post their IPO to comply with the norms. So the company has said that they will be selling 41 lakh shares, which is the base offer, plus there is an upside of 25 lakh shares, which on the whole is about 6.4% of the stake, which can help the promoter bring down their stake from the current 87%. The floor price is set at a 5.5% discount to where the stock currently closed yesterday at 1,400 rupees per share. For non-retail investors, it's today, and for retail investors, the offer for sale is tomorrow.
Okay, thanks for that. Well,
so OFS is just offer for sale for those who are not stock market fans.
Okay, but we are, aren't we? So let's talk about more stocks then. Reliance Infra on our radar today. Anisha, how do the numbers look?
Well, the numbers are steady actually, Sonia. If you look at it on a standalone basis, both the top line and bottom line is better than IDFC estimates. And even on consolidated basis, the revenue has grown sequentially and the finance cost has remained steady. As far as the auditor comments go, they have issued an unqualified opinion and they maintain the emphasis on matter when it comes to Reliance Naval, etc. So status quo there. The order booking has been strong, arbitration has been decent. Expect maybe a bit of green tech on this one.
Okay, thank you very much for that, Anisha. Green ticks, welcome. Now, I think, Nimesh, you got a list of stocks that will be seeing green. They are out of the additional surveillance mechanism.
Yes, Lata. So a bit of a relief for some of the mid-cap and small caps which got excluded from the ASM so-called additional surveillance measures list effective from today. The names are Bansali Engineering, Dilip Buildcon, Goa Carbon, HIL, Man Industries, Himadri Chemicals, Venky's, Tinplate, to name the few. Now, if you look at all these stocks, many of them were down anywhere between 25 to 40% Y2D, and largely the pressure was because of these stocks getting added to the ASM list. Now that these 9 stocks are out, there is no additional margin that investors have put in. Also, there is no T2D, so traders can do intraday trade as well. So that's the reason why maybe all these stocks will be in green, and it's a bit of a relief simply because it's a trend which suggests that now after the cool off, the SEBI is looking at moving some of the stocks back to the normal list, which means there could be intraday trade as well.
A little bit more elbow room also for brokers, so there could be some bullishness overall because of this. It's an important development. Yeah, go ahead.
Okay, some more results that came in post-market hours yesterday. Sonal is here with us to give us that list. Sonal, what do you have?
Well, good morning, Sonia. I'll start with V2 Retail. Strong set of numbers coming from the company. Revenue growth of 32%. All this leading to profit growth of around 29% at 11.2 crore rupees. Poly Medicure also reported good set of numbers. Strong operational performance where the margins, they expanded by 250 basis points. Expect that stock to do well in trade today. However, I can't say the same for Torrent Pharma where the margins, they declined by 430 basis points on a YY basis due to higher fuel costs. That stock should see a red today. Back to you.
Okay. Well, we may have to put ICICI on our radar. Actually, the event is that they have to make an annual filing to the US SEC because they have an ADR listed. It's called an F20 form. So what they have included in the form is what we are enumerating. It has said, one, that the ICICI is in the process of responding to a show cause notice issued by the Indian regulator SEBI, and the SEBI's questions were on non-disclosure of alleged conflict of interest while granting loans to the Videocon group. They also have revealed that the CBI, India's Central Bureau of Investigation, has initiated preliminary inquiry against some individuals and firms and some individuals inside the bank as well. And this again is known information. Mr. Deepak Kochar, husband of Chanda Kochar, Venugopal Dut, have been questioned by the CBI. The bank has also revealed to the SEC that it has its own audit committee has put in an independent inquiry headed by a former Supreme Court Justice, B.N. Srikrishna, and Srikrishna panel will take aid or is already taking help of independent law firms and forensic experts. So actually this is more revealing what we all know, but simply because it's been put out there in the US Fed, there may be a sentiment negative on ICICI Bank.
Okay, sentiment negative on ICICI Bank. In any case, that stock has been under pressure lately, post its numbers. Anisha is also here with us to tell us what the stocks are in the news this morning. Anisha?
Sonia, I'll start with Excel Crop Care. That is in focus because the board has approved the merger with Sumitomo Chemical. Now, remember, after this merger, the revenue and the EBITDA of the company is expected to double, and that is the commensurate reaction that you should see on the stock today as well. So keep an eye out on that. Tata Group stocks are also on my radar, and that is because reports suggest that the Tata Group companies might be consolidated and they might be looking to bring down the number of listed companies. Definitely not the first time that we are hearing this report, but nonetheless, stocks like Tata Elxsi move on such reports, so just putting it on board. Gateway Distribucts will be in focus because the board will consider fundraising on August 9. And lastly, a tad bit of dampener actually for PNC Infratech as a part of the Agra-Lucknow Expressway that was constructed by the company caved in yesterday, so caused a bit of mishap there. Back to you.
Okay, thanks for that. So here's a quick recap then of our top stocks to watch. Stocks with positive news flow this morning. There is HEG, Pidilite, Piramal Enterprises, Reliance Infra, V2 Retail, Poly Medicure, Excel Crop Care, Tata Elxsi, Gateway Distriparks, Bhansali Engineering, Dilip Buildcon, Goa Carbon, HIL, Himadri Chemical, Man Industries, Savaria and Tinplate and Venky's. While the negative stocks, Lata?
Yes, possibly ICICI Bank. It's a sentiment negative only. Eicher Motors for sure, Hero Moto for sure. July numbers disappointing. L&T Tech could see some pressure of more shares coming into the market from the parent. Torrent Power and PNC Infra. Well, with that, that's the list of stocks that will be on our radar. Let's invite the first corporate guest. Okay. All right, we'll get our corporate guest in just a minute, but I've just held back Rima over here because of the TRAI, the telecom regulator's recommendations of cutting spectrum charges. Is that going to make a big impact?
Well, first, let me run you through the news. Multiple sets. One on 700 megahertz, where the TRAI has recommended a reserve price, which is about 42% lower than in 2016. So now 1 megahertz will cost about 6,500 crore rupees versus 11,500 crore rupees. But if an operator wants a pan-India presence in the 700 megahertz, which is is very efficient, the most efficient of them all, they will have to shell out close to about 33,000 crore rupees, which is, by the way, very steep given the leverage balance sheet. And remember, in 2016, no one bought this spectrum because it was expensive. Secondly, they've said that for the first time, 5G spectrum will be auctioned, and this will be for the first time. Over there, the price has been set at 490 rupees per spectrum. Thirdly, what they've said is that the entire spectrum which was unsold in 2016 and that is available should be auctioned. So this will be across various bands. If all the spectrum is sold at the reserve price, then the government can get close to about 5 lakh crore rupees. The government is yet to finalize the timing of the auction. What operators have said is that hold the auction once this consolidation process is complete and the industry has stabilized, which will give the companies a lot more bandwidth to actually bid. What analysts say is that for the 700 megahertz, despite a price cut of more than 40%, they believe demand will be on the limited side, and if at all, it will be for very few circles, because right now it's only Jio which has the cash, to go, or the balance sheet to go ahead and bid for such spectrum, and even Jio has sufficient capacity at least for the next 3 years. On 5G, where the government has said that we will be auctioning for the first time, they're saying the ecosystem is still immature, so therefore there may not be too much bid right now. Also, operators may choose to wait it out for some more time because a significant amount of spectrum which is actually going to be up for sale, so they believe that maybe prices could come down.